Good morning and welcome to Crux Investor. We're here today with Cal Everett, who's the CEO of Liberty Gold. They're a TSX explorer and developer with assets mainly in the US now. So good morning, Cal. How are you?
Good morning. I'm great. Yourself?
Not too bad. Now you're soon to be jumping on a plane, so
That's right.
Appreciate you being here. Why don't we start with a 2-minute elevator pitch, just kind of set the scene for people who are new to this story, and we'll get into the detail.
Of exactly what Liberty Gold is.
Exactly.
Liberty Gold is focused on Carlin-style or sedimentary hosted gold systems in the Great Basin of the United States, in Nevada, Utah, and Idaho. And the company has a portfolio of assets around the world. And I've just spent a week in Turkey on our Turkish assets because there's a monetization process we're working on there with our partner Tech Corporation to try to monetize those projects and effectively just make the company United States focused only, sediment hosted gold in a stable geopolitical jurisdiction with a stated tax policy where it's easier to permit mines. So our focus is all of our exploration dollars go into the United States, but 90% of my time goes with regards to monetizing those Turkish assets. And basically the logic is if those assets do get monetized, and I'm not going to promise anything at this point, whatever we get back from those assets is money in our treasury with absolutely not a share of dilution to the shareholders.
Right.
That's the logic of it all.
Mm-hmm.
And then you don't have to go into these problematic markets where it's tough to find money and you're already fully funded for a year, 2, 3 years to come. And that just propels the company forward when other groups are being held back.
Right, okay. So we'll get into the detail of the US assets in a second, but let's just cover off the Turkish component there. You've had that asset for how long?
That originally, the predecessor company to Liberty Gold was Frontier Gold. And then stock dividend became Pilot Gold after Carlin discovery we made in, I think 2009, was sold to Newmont for 2.3 billion Canadian in 2012. And then the assets in Turkey were spun into Pilot Gold, and I've name changed the company to Liberty Gold to show where the company focus is. So we've had those assets for quite a while, and originally 2 of the assets, the Kirazli project and the Ada project in Turkey, were sold to Alamos for $83 million in I think 2009 or something like that. And that money went into drilling the Long Canyon deposit in Nevada for Frontier, and then that subsequently became a 2 million ounce plus deposit at 2.09 grams of oxide. And then Newmont paid up at a $1,900 gold price to purchase that mine. And that mine right now is the most profitable mine in Newmont with all-in sustaining costs of $359 an ounce. And so now the reason there's more interest in Turkey is, as you know, there's a deficiency projected for copper concentrates. And Turkey is open for business, and I don't think people recognize, but they've permitted 15 mines in 15 years in Turkey. So they can, from start to finish, a Turkish mining company takes about 3.5 years to get a mine in production with all the permits, and they're producing. Mm-hmm. If you're going into the United States in a sedimentary hosted system, it might be 7 years. If you go into Canada, it could be 10 to 15 years.
So why are you offloading it?
Because our shareholder base and the companies we talk to who are reviewing our Great Basin assets would rather the company be presented to them with one sole focus, because perhaps the jurisdiction they prefer to be looking into is non-Turkey and only United States.
Right.
It confuses your shareholders.
For sure,
yeah.
For sure. Okay, so the Turkish asset wasn't a mistake, it was something that was inherited.
Yeah, but it became a tremendous discovery.
Right. And what are you trying to, and a similar type of ore body to which the teams are used to?
No, it's a porphyry copper gold deposit.
Right, okay.
Yeah, it's 125 million tons of 0.35 copper and 0.35 grams gold.
Right, so are you in a process for selling it at the moment, or?
Well, there's always been a process going on, but we don't need to use a banker. I know how to do that myself.
Right, okay.
As does Tech.
And what sort of quantum are we talking about?
In terms of price range?
Yeah.
I won't give you that.
Not even roughly?
Not even a guess.
Right, okay. But you're expecting a sum of money which will come in as cash for the business?
Yeah, we would hope so, yeah.
And that'll allow you to focus?
I can give you a quick second or minute on what the economics show.
Fantastic, do that.
Okay, so in 2015 we did a PEA on it using the Turkish lira at 0.44 to 1.
Mm-hmm.
It's now 0.17 to 1. So at that point, there was a projected $345 million US capex and an after-tax IRR of 43%. But now the lira is 0.17. So with every 0.1 of the lira, the economics of that project improve an after-tax IRR by approximately 2%. So now if you go from 4.4 to 0.17 and use current metal prices, we can just change the numbers in the PEA and put in a new estimate of cost to build the mine of approximately 240 million US. The after-tax IRR would exceed 80% with a payback period of less than a year with a 14-year mine life.
So why not find new investors who'd be interested in that? I mean,
because
IRR,
we have a 40% interest in that case, and then I'd be subject to random cash calls in a mine production scenario that I would have to finance going through time, which could be a killer for the capital structure of Liberty Gold. Right? You always have to look forward to what can go wrong before it goes wrong in this business. And the operational side of the industry quite often doesn't, because they operate in a herd mentality. But on our side of the business, it's different.
So that's kind of interesting. So you're saying it's a business which has got a projected IRR of over 80% is not interesting enough to the market because things go wrong.
That's correct, yeah.
So businesses with IRRs projected at
30% easily go into production now.
Right.
If they're in the right jurisdiction.
Right, so you're saying the key differentiator here is purely the jurisdiction or the geopolitics or anything associated with it.
Yeah, I mean, if a Canadian company wants to walk into any Eastern European country, they need kind of an Eastern European partner in order to get through the procedures that government declares in the mining industry. Right. It's as simple as that. So we come in with Teck Corporation. The project is, quite frankly, not big enough for Teck. It's not going to move their balance sheet by anything. And for us being a 40% owner of a mine, right, it's not that relevant to us.
So you're saying, so you help me, so you're saying Turkey is a good place to mine?
It's a great place to mine.
But not for you?
But not for us, no. Because of, it's basically, you have to make a choice when you're running a public company. And the management make a decision. Are we going to get more ounces out of the Great Basin than we are in building a mine over a 3-year time period, subject to draws on your balance sheet? And the answer is really quite easily, we should be in the Great Basin. That's where our bread and butter is made. Okay,
so there's a slight, would you say that's a change of direction for the business or a refocusing for the business?
Refocusing, yeah.
Refocusing for the business. And so let's get on to, we'll leave Turkey. You're in a sales process there. There'll be some monetization event.
We hope,
at some point in the non-too-distant future.
That's your words, yeah.
Okay, right. Okay, so that's happening, maybe. So let's talk about the assets that you've acquired. I mean, how did you find them? When did you find them? And tell us, give us a little summary on each one. There are 4, as I understand.
Inclusive of Baxter Springs, I think, looking at the document you're looking at.
Yeah.
There's actually 5, and now there's 6.
Right.
Okay, so those assets are selected by Morris Smith, our VPX. And the same geological team has been together for 14 years, give or take. And the group of 4 geologists have, at this point, a new one started the other day, and that excludes Halila. That's their discovery in Turkey. The Turkish discoveries are theirs.
What's this team known for? This team?
Carlin-style gold deposits, right? So right now they have 8 operating gold mines that are profitable under their discovery belt.
Right.
And so that group, Moira and her teams.
Any big ones that we'd recognize?
Long Canyon.
Right, okay.
Yeah, Penasquito.
Right, okay.
El Limon for Torres Gold.
So some meaningful ones.
Pogo in Alaska. They can keep going,
Economic means different things to different people. So
okay. They're a rarity in the mining industry.
Great. Okay.
They're that good. And they have a running mandate with the company. You go crazy, and if you want something, call me. And if I can get it for you, I'll get it for you. And if we can afford it, I'll try and get it for you. And they just keep looking at things as we go. And so they picked the Gold Strike target in Utah. And I wasn't working for the company then.
Oh, right. When did you join?
I joined when the company was changing their president. And Mark O'Day came to see me, had lunch, and he said, would you be interested in coming out of retirement? Because I retired at 59.
Right.
I was like you, institutional mining and corporate finance and all that. And I said, what is it? And he said, well, it's the Gold Strike project in in Utah. And he didn't know, but I represented a second buyer for that asset. I'd already done 2 or 3 months of due diligence on site.
Recently?
Before I came.
Right.
And I was another buyer. And I can't disclose who the buyer is, and I can't disclose what my price was, but Pilot Gold won the auction, and they got the asset. So I was comfortable with the asset. That was easy. And so picked that up, and then after that I was there for I think a month or 2, and I went to Moira and I said, anything else you want? We've got money. She said, I want the Black Pine project in Idaho. And I had that secured in 48 hours for $800,000 US in cash and 300,000 shares of the company and a 0.5% NSR going to the property owner so they could take the NSR and retire the liens on the property.
Right. You had an agreement or an option?
No, I had an exclusivity period done and ready, and then it took 2 or 3 months to close it. But because it has to go lien free, because you won't take on a liability. And then the company already owned the Kinsley deposit, which is in sight of Long Canyon, and there's I think 522,000 ounces of 43-101 compliant gold there. And then the Baxter Springs project is south of Kinross's Round Mountain mine, and it's 15 square kilometers of a crisscross pattern of jasperoids running as high as 15 grams at surface, and there's independent drill holes in there of 33 meters of 22 grams, but that's obviously running down dip of a vein structure. Okay,
so you used an interesting phrase there a second ago when you were brought into Liberty Gold. You said, "We have the money. I want these assets." So what does that? What does that mean?
It means if we think it's got 2 million ounce potential, we're not going to stop buying.
Right.
As long as we get it at our price. I'm not paying up for anything. It's shareholder money.
Okay. And how much cash was available at that time for
10 million Canadian.
10 million Canadian.
No, that was to run all the exploration and G&A and everything.
Right. Okay.
Yeah. Okay. So once you buy one of these projects or acquire it, they come with a tome of exploration data you didn't have to pay for. So on the Gold Strike property, it came with 1,519 drill holes. So the permitting process in the United States is onerous, whether you're dealing with Forest Services or the Bureau of Land Management. So by the time you start a permit and get your final plan of operations, it can take 2 years. So that's a time suck that you have to work your way through, really. And so it takes 2 years, and we now have a plan of operation that allows us to do what we want, where we want, at this point in a gold market. They're all there. There's no waiting anymore. Black Pine's done. It's drilling today. Gold Strike is done. 2 of the major deposits are being drilled contemporaneously in the U.S. right now. And there is one long-standing on Kinross, and Baxter Springs, no, but we also own the old Griffin mine, which is another oxide system we've never gotten to. It just sits there because we're just too busy on the 2 main projects. And recently we were informed by Coral Reef LLC out of New York, and that the Regent deposit, which is around just under 300,000 ounces of stackable gold equivalent, gold and silver, is in production now. And the company owns a 15% NPI after payback of initial costs in that. And that's should hopefully be paying us revenue at the end of next year.
Okay, so that sounds like a lot of moving parts.
There's always parts, yeah.
And that costs money.
Yeah.
So can we just talk about the finances?
Sure, you can. Yeah.
Okay. So what's your cash position?
Right now, I think it's around 7 million US or something like that.
Right, and that's going to get you through to when? A burn rate is people.
Oh, to get us through to the last quarter of the year. But if our monetization process in Europe works, won't be looking for money for a long time.
What do you mean by monetization process?
The Turkish assets.
Right. Okay. So and that's the only asset you're looking to offload?
That's at this point, yeah.
Right, okay.
There's inquiries about some of the other assets to purchase them as well.
So what happens if that doesn't sell?
And then I'd be dealing with strategic investors from major mining companies, and I can always raise the money.
But in a way which might dilute the current...
Every financing is dilution for every single issuer on the market.
Right, okay. I mean, you've kind of interesting period. I mean, if I'm looking at the share price, highs of 48 last year, lows of 29. 1st of February this year is at 43. We're back down to 35. So
it kind of looks like a lot of charts.
Well, a lot of charts are going down.
I managed to keep it relatively more flat.
We've had tax season selling and all of that kind of good stuff that happens in the Canadian markets. But that suggests there's a lot of uncertainty in the market as to what you're doing. Do you think this new story has impacted on that, or?
We generate a lot of news.
Right.
And we've got I think maybe 10 institutions
Right.
that own our stock.
Yeah.
The Van Eck Fund, not the GDXJ, but Joe Foster's fund, owns with his warrants 19.9% of the company.
Right.
The RCF fund out of Denver, they've got about 14% of the company. There's several other funds out there. Insiders, I think, are at 6.6%. And I've only been there not even 3 full years. In my first year, I bought 2.4 times my salary of the stock in the market.
Yeah, so
you see it in Insiders.
You continue to be a big buyer.
Yeah, and I bought it the year last year and the year before last over 2 times my salary.
Yeah.
And it's basically, I just made all my money in my career in bearish markets. And if I can find deposits that are going to make money in a bearish market, I load up. And when my market eventually comes to me, I monetize that. And I live very happily after that, right? So you have to have patience in this business. Yeah. It's not a trading business.
So let's get again. You've got a bunch of institutional shareholders. They're sitting on quite a hefty sum.
Yeah, I can talk to 70% of the shareholders on any given day.
Right, fantastic. And you prefer institutional to retail?
But I don't.
How do you balance that?
Retail is fine. Institutional means they're just bigger positions that you talk to.
But there's also less liquidity.
Well, there's a lot of liquidity in this stock. It averages 300 to 500,000 shares a day, which is good for institutions. So if they want to get out, they can get out. If they want to get in, they get in. And I've been around long enough that I'm not offended by a sell order because if you bought the stock, you have the right to sell it, right? If you buy the stock, hopefully you make a profit and we do our jobs. And so a lot of people who run junior mining companies don't like the unexpected market cap shock of a big sell order when they're not prepared for it, nor could they get prepared for it. And that's why you see some of those charts ending just straight downward.
But that's kind of unusual. I mean, institutional guys selling, they typically...
No, it's not in this market.
Really?
Because if you've got a fund, and I know several of them, I've talked to 50 of them, and all of a sudden, one fund I know has had a cash withdrawal from his gold fund all but one day in the last 30 years. So if he's got $50,000 that he has to show up with cash on that day, he has to sell $50,000 worth of gold stocks.
Yeah, okay.
That's the way it works. And if he's got an inflow, his mandate is he's got to go out and buy $50,000 worth of gold stocks.
I get that. Okay, we'll have to agree to disagree on the fact that it's usual or unusual. It's certainly not what we're seeing with a lot of the people that we've been talking to. In terms of the institutional guys tend to hold a little bit longer.
Yes, they do.
If they're in. The retail guys, high net worth family offices, tend to drive liquidity and they have an effect on volume of trading each day. So it'd be interesting to see how that plays out. So with the business, I know it's kind of morphed since from before you've been involved. I'm not saying giving you plausible deniability here or anything, but it has morphed in the sense that it had this Turkish asset. We're now going to be focused on the US. It's a better jurisdiction, geopolitically, it's safer, and all of those things that people say. I mean, how much money's actually been pumped into the business, and how much has come out, and has there been?
Oh, those numbers are easy. They're public.
Okay.
Right.
Yeah, no public. But
yeah. So, on the, do you want me to start with the production side of the industry? Because I could go all the way down from discovery since 1990 to anywhere like.
As you say, it's all public. It's all there's a lot of numbers there, and I would rather you focused on where's the value coming from for shareholders, potential shareholders. Why should people be buying into this?
The actual exploration expenditures are down by 66% since 2012. Okay. So no money is going into the ground. On the production side of exploration, they shut down their exploration. Effectively, they're only looking for brownfield extensions of existing gold deposits that are in operation. And so they're not exploring, nor are they making discoveries. So the production's not drilling. The explorers were for a couple decades the supply chain of the future of the mining industry. And we're not exploring. There's only a few of us who can afford to explore. And those discoveries are few and far between. Like you don't see them anymore. And I think there was no 5 million ounce discoveries last year. whatsoever. And every year the mine life of these producing mines are falling. Since 2012, the average mine life has gone from 15.7 to 12.4 years. And if we haven't explored for 7 years, and the permitting time on top of that, 10 years out, you might be seeing average mine lives around 7 years for the producers. And then then the oil price will logically go smoking. But it's all about funds. So if I was looking for funds now, and you can see it with a lot of majors, they're still taking equity interest in public companies, and a lot of juniors are continually going to juniors, to the producers, looking for them to invest. And there's private equity funds which sit on a fortune, and they're very, very conscious, and they're taking advantage of the people who are being crippled.
Yeah, but we hear that a lot, and that's part of the pitch for explorers. They talk about this deficit, in fact, no investment going. We know that. What I guess people want to understand is how you're going to actually deliver that. So we've heard you've got a exploration team, been together 14 years, some big discoveries there, responsible for a lot of ounces out there. What gives you encouragement? And I know you have got encouragement because you're putting your own money into this thing regularly.
Yeah, sure.
What encourages you to believe that these assets, these 6 assets, are going to be able to deliver those ounces?
Well, we've already got 1.2 million ounces at Goldstrike.
Which is a good starting point.
It's a good starting point. But that needs to get to 2 million ounces. So it's now being drilled to get to 2 million ounces. So when we did a PEA on that, we released it last year.
Is that across how many assets?
That's just one project.
That's just on Goldstrike? Just
on Goldstrike right now.
Okay.
So
right.
we did a PEA on it, and there's a good PEA and a crap PEA. We both know that. You can do a PEA and 40
Big
drill
variance.
holes. It's like whimsy in some cases. You have to really understand what you're doing.
Yeah.
So in that PEA, because of the way our geologists operate and they do their compilation work, that had 1,700 drill holes in it. That's a good PEA. And 75% of that resource was measured and indicated. And that's 3 holes within 50 meters of each other, within 50 meters. That's how tightly drilled that density is. And to do a pre-feas, you have to have measured and indicated. So we're 3/4 of the way through that on that deposit. Right. That's how prepared we are to deliver, right?
When do you get to the end point there?
To the end point, well, we've only drilled 30% of the target.
30%. So what's the timeline on that?
Oh, it's just money. It's money driven and drill holes. It's cheap to drill because they're short holes and they're RC holes, right? And their permit allows us to go wherever we want. So we can drill some days 2 drill holes in one day, and we pay by the hour.
Right.
So your drill costs are going down, and it's just the same geological costs and management costs are on that, and the assay cost is a fixed number. So on that PEA, the after-tax IRR, I think it was at $1,300 gold, was 29.4%. But we excluded byproduct silver, which historically the mine produced an ounce of silver for every ounce of gold. Right. So that would have popped the after-tax IRR by maybe 1.5 points. Right. We excluded the heap leach pads, which we've drilled. We have the permit to perforate the liners of the heaps. And there's 8.1 million stacked tons there, but the grade on those stacked tons is twice our cutoff grade. So you could crush that heap leach pad and put it as the base of your new heaps, and you're going to get more ounces. And the average recovery on that mine was 75%. And we've done our metallurgy on it, and we're just about finished our second round, so that news will come out soon.
Right.
And we get 80% of a recoverable cyanide leachable gold in 8 days. It's the best in the Great Basin.
Right.
So if people don't understand what a heap leach operation is, it's like a quarry.
Right, so you're just moving large amounts of earth, processing it, and you've hopefully got some gold at the end of it. So what's a grade? There's a low grade, high volume.
Yeah, sure, I can give you the numbers. For the big producers in the Great Basin, the average grade is 0.53 grams for a run-of-mine heap leach. Ours is 0.48. Okay,
so you're there.
Okay. Yeah. Their recoveries average 70.53. Ours are 78%. Okay. But ours isn't 78%. And I'll tell you why, because they rinsed the heap leaches for 3 years after that mine shut down and produced 45,000 more ounces. Right. So that's real recovery. It's 75 plus the 45 on a percentage basis, which takes you over 80%. It's just a unique deposit that leaches like a dam.
Right. Okay, understood.
So we need to take it to 2 million ounces, which gives you, right now I think it's a 7.5-year mine life excluding last year's drilling at 95,000 ounces of gold a year. So the target has to be 100,000 ounces, which meets the base for an intermediate gold producer for one mine, because we're certainly not going to drill something for a 30,000 ounce producer. That's just a waste of our time, right? It's like a hobby if you're going to go down the food chain that low. And then it goes up to 95,000 ounces, right? So we want to take it up to 100,000 and 10 to 12 year mine life, which solves the problem of a producer with declining mine lives, with due to no exploration.
So you're saying there's a fairly easy business, really.
Oh, it's really easy.
You're just moving large volumes of earth efficiently, cheaply as possible. You've, say 0.5 grade, just slightly under. It's just a numbers game for you. Is that?
Oh, well, it's easy. I mean, if you go look, I'm not sure if you can see that behind me, but the credenza is about 12 cubic feet here. Mm-hmm. That's a ton. Mm-hmm. That's what a ton of rock looks like if you wanted to model it in 3D. Yeah. But it's the strip ratio is everything.
Right, exactly.
Right, because of, and the metallurgy. So if the cash flow is quick and the strip ratio is 1.2 to 1 and it costs you $1.80 to move a ton of waste and $1 to move a ton of ore because it's got to be drilled differently, and you take the grade and then say it's $22 rock and you're going to get 80% out of it, so you might get $18 rock, and if all your handling costs and processing costs are $10 or $8 or $9, that's your profit on 75 million tons.
That's what I'm getting at. I was asking you, why should people believe you guys can do this? Because it's an easy, well-trodden path. You're really just dependent on the grades continuing.
Yeah, but we've done it before. We've built a mine before.
Right.
In Africa, in Burkina Faso. We know how to build it. We have to de-risk it, build it, and sell it, or de-risk it and sell it.
Okay.
Right? It's just a very, very simple process.
Okay, so I think that answers the question. So if that's the case, so where's the value coming in? What do you, I mean, obviously we've got a potential sale coming down the line. There's a bit of cash, but that's going to go straight back in the ground. Yes, there's no real upside there for existing shareholders or new shareholders.
The upside is their shareholder base stays exactly the same with no dilution. It's a massive upside.
Massive, okay. I'll buy that. So going forward, where's the other value coming from then?
The other value is probably the Black Pine project.
Right.
Which is now leapt in front of Goldstrike because of what we found.
But okay, at the moment you've got $7 million of cash. So when you say leapt in front, how does that cash distribution or allocation?
More money is being spent drilling Black Pine this year than Goldstrike.
How much?
Oh, it'll be about probably 30% more, based on the budgets.
30% more. Okay.
Yeah.
Right, and we know your $7 million is going to get you.
Yeah, we just started drilling it a week ago.
Right.
But it's unique. We found something we never expected we would when we bought it. What was there when we found out?
Tell me.
I can tell you what's there.
Okay, sure. Go on then.
Yeah, because we bought a past producing mine. It was the old Pegasus mine. It shut down in '97.
Right.
It stacked 685,000 ounces, produced 435,000 ounces of gold from 5 aggregate pits. And we bought it with 560 drill holes in the database with the recognition that we didn't have the data, we had to start from zero.
So what value did you put on that then?
Well, we bought it for $1 million in aggregate, yeah.
What do you think that looks like on your books now?
It looks substantially
more. We're hoping.
More, yeah.
Right. Okay.
Okay.
So you got to spend a bit more money on it this year, and you think that
we just spent 18 months. We went in. Our geologists found the data.
Right.
In a Forest Services file that the vendor did not know they had, and in that Forest Service file was 1,875 drill holes. Every blast hole, every soil sample, all the geophysics, all the cyanide soluble assays, absolutely everything. Took 18 months to put it together and get it permitted. And we came up with a model on it that we were sitting on something, and we published a 2 to 4 million ounce target on that. And at this point, where we're sitting, based on our valuations, we think that could be conservative. Okay. And it's the largest unmined oxide gold system left in the Great Basin. And I'm not exaggerating. We've defined 12 square kilometers of exposed oxide gold at surface. Okay. Okay. And so the average depth of the historical pits was 100 meters, and there's not a drop of water in those pits. Okay. The drainage, groundwater, any groundwater that's there, flows into the dry part of the Great Salt Lake. There's not a fish on that side in a dry salt lake. There's no environmental issue. There's road, there's power, there's water to site. Okay? So we applied for the plan of operations. We have the right to go anywhere we like and drill where we like over 7.3 square kilometers of oxide. Right. So in the modeling of the entire project, after all this work, we twinned a historical drill hole. And the holes, 95% of those holes only go down to 300 feet or 93 odd meters. And our belief was there's a high grade portion at depth based on all of our modeling. And so we twinned a hole in late 2017, and it was 40 meters of 0.5 grams, and then there was a gap, and then there was 5 meters of 1 gram gold of oxide, and it stopped in oxide because the drill, those days the miners were shut down. It just says stopped in ore. So we twinned it, and we hit 40 meters of 0.58, then the gap because there was a calcite breccia in there, and then we hit 15 meters of 1.2 grams, and then we hit another calcite breccia, and to the bottom of the system we hit 77 meters of 1.49 grams oxide. Okay, so whopping grades, but in a 200 meter hole, 132 meters ran over gram on average. You don't see that in the Great Basin. So we now know that the target depth that it has to be drilled to, depending on where you are and where you're exposed in the rocks on surface, over that massive 12 square kilometer area, is between 150 meters to 350 meters to get to the base of the system. And there's no sulfides in that system whatsoever. It's all oxide. We haven't seen one like this in a long time that's this big.
I mean, that doesn't seem very big to me. So what does it mean in real terms?
In real terms, a kilometer by a kilometer by 100 meters.
Right.
Aggregate with a specific gravity of 2.56 means you've got potential for 256 million tons.
Right.
And if it runs a half a gram, you've got 128 million grams.
Right, okay.
Divide that by 31.18 grams and you're over 4 million ounces, and that's a square kilometer of a 12 kilometer drill confirmed oxide system.
Okay. And obviously no sense of the economics on that at the moment, only indicative.
No, but we have our own internal models, which I won't give you how many ounces we're starting with without drilling.
Right.
But I would say it's substantial.
So that's Black Pine. You're going to spend more money on that than Gold Strike.
Because it's too big.
Because it's
too big and it's got whopping grades in it.
Right, okay. So I guess what I'm trying to say is, how do you get to the point? What happens if things don't kind of go well? I guess would you then flip these assets out somewhere else? If you don't have it? You think you've got enough data now to say this is the company maker, I guess, is a fair phrase. Yeah? Okay. What are you doing with Kingsley, Baxter Springs?
Kingsley, we spend $500,000 on it a year with our partners on a contractual.
You're required to spend that amount.
Required to spend that,
right.
And we do spend that. And Baxter Springs just sits there, gathering dust because we don't have time to get to it.
But you're not going to offload it?
No, it costs nothing to keep it in good standing. It's nothing. Right. And Griffin is the same thing. We keep that in good standing.
Right.
And we'll look at, once we figure out the rawhide royalty, whether we want to monetize that for extra cash or not.
Right.
Right. And so we're just analyzing what that's worth right now. We're not there yet. We're dealing.
So it seems to me you are dependent on offloading Turkey.
No.
You'd say
I'm not dependent on anything.
Because you think you can go to market.
I can get market. I can get it corporately, and I can get it from royalty companies. I can get it from wherever I want. It's just the timing of when I want to do it.
Well, and the cost, I guess, you'd have to do the economics around what that's going to cost you now compared to what you actually want to pay, yeah? So therefore, Turkey's the ideal solution, maybe not dependent.
Oh, it's easy out.
It's the easy out. And that will give you the cash you need to kind of move those two assets, being Goldstrike and Black Pine, where you need it to be to go and raise cheaper money at some point in the future.
No, I don't think if things go the way we hope, we may never have to raise money again.
Okay, that's
I think you can de-risk. Well, Goldstrike is de-risked. It's just mine life in ounces. But Black Pine as well.
You mean money, or do you mean equity, or do you mean don't even need debt?
No.
At some point, you're going to need debt to.
If you're going to build it,
if
you're going to build it, you always need debt. You'd be looking at a 30% equity versus debt scenario, because these things are cheap to build, right? You know, to get the same amount of ounces out of an underground mine in Canada is going to cost you 6-7 times the capex to build it. Right. Heap leach mines are dirt cheap to build. It costs you 100 to 150 million US, and you pay it back off if you've got starter pit material, which we have at Goldstrike, and we're sure we have it at Black Pine. And then your capex is paid for, and you're good to go.
So that's really interesting for shareholders.
Sure. Well,
potential shareholders.
Because now that the Barrick joint venture with Newmont is done, Barrick's got Nevada.
Yeah.
Right. So Newmont and other people who want to get into the Great Basin, they've got to go into Idaho and Utah.
Yeah.
And we've been tying up Idaho and Utah now for years.
Yeah.
Right? And so that's why we acquire them and we just hold on to them.
That's interesting.
Yeah, it was a plan set out several years ago.
Okay.
Given the case of the gold market and analyzing all countries around the world, Africa, wherever, and they fall. Like Libya just fell the other day. You're not going to Libya. You're not going to Algeria. Nicaragua's got problems with the Sandinistas, right? Guatemala's got issues, and parts of Mexico have issues. So effectively, government changes, military coups, whatever you want to say, and countries that have no money want to take it from the operating mines. The balance sheets are affected by these producers. So we just went and said, okay, we're going to zero in on safety.
That's really interesting.
Years ago.
That's really interesting. So a couple of years ago, 2-3 years ago, you decided, well, when you joined, I guess, you're saying, right, we need to get back to sacred jurisdiction. The strategy will be this. We feel that. I mean, does this any bearing on Trump coming in here? Because he's obviously pro mining, right?
Mm-hmm.
I think he's been good for a lot of people in the region. Was that part of your process or part of your thinking back then?
No.
Or was it just purely, let's get back to the States where we know what we're doing?
We just went to the jurisdiction. It didn't make
Right.
any difference who was sitting in the throne.
Right.
Didn't make any difference at all.
Interesting. Okay.
Yeah.
Interesting. Okay. Okay. Well, I mean, why don't we talk a little bit about you and the team who are going to be delivering this? Because you said it's a pretty, easy process. It's a case of just putting it together. You feel you're going to have the capital to take you through to, I guess, post-DFS is what you're saying, potentially, if things go according to plan, which is very encouraging for the anti-dilutionary crowd. So tell me a bit about you, and I know you're a geo and a banker, which is quite an unusual combination. Let's start with that.
Oh, sure. I was a geologist working for the mineral exploration arm of Imperial Oil. Worked for them for about 12 years until 1990, and worked underground in the Red Lake Gold Camp as an underground geologist. Volunteered to do that, basically because I needed to learn how to think in 3 dimensions. And so effectively I can spin this room around, or any room, and figure out what's going on, where I'm supposed to be geologically in drilling a hole, right? Because when you're underground and you're in the dark with a light on, you have to know how to project like a 1 centimeter controlling structure with ore to the left and waste to the right, where it's going to be 500 feet from there, where to drill a hole. So I did that, and then in late 1989, Homestake Mining took over SO Minerals Canada. And I had the optionality, or option choice, to either go into the oil patch in Calgary and or stay in Vancouver and go look for work. So I decided to become a stockbroker. And I'd never taken an economics business course in my life. And so I applied, and I got 6 offers in one day. And I took an offer with Burns Fry because, quite frankly, the training course was 5 days and I was a broker. I didn't want to waste my time. And you go from a salary to $1,200 a month, right? It's really quite funny. And my wife was working. She was a nurse at that time, at that time, and so we were fine. And then after 4 months, I went off my $1,200 a month and went on to income. And then in my 4th year there, I was the #1 producer for BMO Nesbitt Burns in Canada out of 1,200 brokers. And it was all mining focused. And when when it got into 2002, I tried to take on institutional clients. And that's hallowed ground, as you know, on a trade desk, because that's where the big money is. In those days, not today. And so they wouldn't let it. So I just quit. And I went over to PI Financial, which is 25% owned by National Bank. And then I was their #1 producer in my first year until 2008. And over that period of time, I raised, I don't know, several billion dollars, $2 billion. And I think there was something like $15 billion worth of takeovers. There was failures. There always are failures in exploration when you pick them. And I was just looking for early stage things that I could look like I could multiply my clients' investment capital on. And that was a good gold market. So timing, it's not necessarily brains, it's timing.
Sure.
Right?
Always.
And there were very few people with a geological background who were on the institutional side of the mining industry.
So you've been through that process. I mean, what did you learn? I mean, there's a few mistakes in there.
Oh yeah, there's lots of mistakes.
A few successes. So how are you applying that to what we're looking at today?
Oh, well, yeah, it's really quite simple. I mean, I did the original financings for a Cisco.
Right.
And it took me 3 months to raise them $6.85 million because nobody understood bulk tonnage gold deposits.
Sure.
So what I had to do is go to the IOCG belt in Chile and compare it to a porphyry copper and just say, okay, this is 0.8% copper equivalent, and here's the gold, and the recovery is the same at 92%, and then I got a lead order for 9.9% of the company from a fund out in New York who ultimately made $350 million on that trade. But you had to re-educate them because nobody understood them. Now everybody understands them.
Yeah.
Right? That's how the system goes. And then we started producers and copper companies, and several companies were taken over in those days.
It's interesting what you say about people didn't understand it back then. Do you think they understand it now? I mean, what are your brokers saying? What do you think the market's
How many
saying?
brokers are left? I think 85% of trading are passive investment formulas and computers now.
Yeah.
I don't think there's much dialogue going on between you as my broker and me, and you giving me advice anymore.
Yeah.
Yeah, it's just a different.
But what about the people covering you, for instance, like Haywood, etc.?
Oh yeah, yeah, I talk to them all the time. Yeah.
Right.
Yeah, on every news release we talk, and they do site visits, and they've got an open door policy. If they want to take their clients to site, private or institutional, we'll set it up. They can go. They can visit anytime they want.
Do you think they're doing a good job in explaining it to their clients? Not necessarily Haywood, but all brokers.
I think they're doing a reasonable job for it, but they're not going to be looking for orders in a public market because they don't make any money on a trade, because the discount trading is punished the sell side of the business. So they're looking to finance.
But okay.
So they get a 5% fee, which is logical.
Sure.
Yeah.
So obviously, people's business models have changed over the years, as you said. You used to make a lot more money. People have had to change certainly on the institutional side, change their business models. How's that affected you?
It hasn't really affected me because I can do all sides of it,
Okay,
right? Because it's like,
company.
we used to say it was a wholesale, retail, and fairy tale business, right?
Great.
Right. So the wholesale guys are the institutions who want big blocks of stock and they want leverage with that. Then there's the retail component, and then there's the dream that you sell. But you better be selling a legitimate dream, right? And it's got to be backed up by hard numbers and facts and reality and QA/QC and everything else. And I'm not going to say what companies do or who they might or might not do. This is what you have to do to make it perfect.
Yeah.
And then if you can find money and create liquidity, that's the benefit of the industry. So I've been doing it for 25 years.
Yeah, but I kind of likewise, unfortunately.
I know. Yeah.
And you see different degrees of understanding from a technical perspective, from a financial perspective, and from a wider market perspective in terms of all the different we're talking about retail, family office, high net worth side of things. With a very little understanding, very little information actually. You talk about the need to provide accurate numbers. It's hard. It's difficult. So I think what do you think the market should be doing better to tell stories like Liberty Gold's story? Because to me it seems quite an easy story to understand. But
it's really easy. Yeah.
Do you think you're getting fair value in terms of market cap at the moment? Or have you done enough, or is it the market?
You can only do what you can do, because we all work 12 hours a day, 7 days a week, right? So if I leave the office, I'm working from home. Mark O'Day is our chairman. He knows what to do exactly what I do. We're both trained the same way. We can both raise money. But I'm not the geologist I used to be. I'm more financial. So you understand, I'm not there to go pick where drill holes go. The people who find mines do that. My job is I'm paid for strategy and how to time it out and how to sequence things to move a company forward. And you can't push on a rope. If the market's against you, you're going to be stuck in the mud. 1 foot in the mud and 1 foot on pavement, whether you like it or not, until the market does change. The gold price can change that. But the lack of discoveries will change it, will I think, change the junior exploration sector faster.
I get that, but
than the gold price.
Let's not get onto the macro. Let's stick with the micro here. I believe that a lot of mining companies could work a lot harder at communicating better to their investors, okay? And I would encourage certainly our investors, our viewers, to interrogate the information the company provides. Very, very few people read the disclosures, for instance, which is crazy. The information's all there. And I'd also say that they don't necessarily need to have a technical appreciation of what the company is doing, but they do need to understand what questions to ask the company, and the company should be able to give that information in a way which is understandable to non-technical people.
Yeah.
Right?
And we figured that out. Our website's designed that way.
Yeah, I think you've got a good website. I also like your the other Oxygen Capital one, Pure Gold.
Yeah.
And I know you've got a couple of others.
Sun Metals.
Ones. Yeah. So I think Oxygen Capital have identified that and done quite a good job.
Yeah.
But what do you think that else? What else could you be doing? What more could you do?
We're not married, are we? I mean, is
Yeah.
well, I guess I might get that from my wife, but you know, what more can you be doing around the house?
Well,
right?
I think it's a fair question because you know you know what you know, and you do what you do, but you've got to be aware about what's going on out there. It's not an easy market for gold. People just aren't talking about gold at the moment. It's a great commodity. The price isn't there yet, but a lot of the gold companies who should, you know, if I'm looking at it from a purely chart basis, financial basis, you think, well, that should be worth a lot more, but they're not. So something's missing.
Well, the market's not is going to give you the valuation it's going to give. And so there's less investor money in the market. And one of the main reasons is the fact that people have been punished since 2012 with tax losses. And then they go look at different industries. People say, oh, Bitcoin took the momentum out of the mine. That's crap. Right? Those are just lame excuses for a futile market.
There's always been distractions.
There's always been distractions. And so, as you know, through time in the mining industry, things change. And a great example is actually the diamond industry, when diamond was found. And then the market went out and went crazy, sampling the Northwest Territories for glacial deposits. We found 1 G10 garnet. Then it became, the stocks would go up $1 based on a G10 garnet, which is a high chrome nickel garnet. And then if you had 6 garnets, oh my God, the stock would even go higher. Then everyone says, but there's no kimberlites there after they spent 10 million drilling the damn things. And then they had to go to something else. Well, we had ilmenite, we had rutile, we had all these things. And then we closed in, oh my God, there's a round anomaly, which they affectionately called dog's balls anomalies. It's an old BHP term. And they drilled these gravity lows, and if they hit a kimberlite, the stock would take off. And then it got into 10 microdiamonds versus 100 versus 1,000. And then people say, well, they're microdiamonds. What the crap does that mean? So the diamond industry grew from over exuberance to reality, and then it calmed down, right? So copper industry does that as well, right? So if the copper price goes from $3 a pound down to $2 a pound, everyone's sad. Industrial cobalt goes through the roof and comes right back down, right? When you're chasing an industry with a finite number. But the gold industry is always the gold industry. It's money. You can change it into any currency in the world on any given day. And the reality is there's 10 big producers over 1 million ounces, 25 intermediates, 300 to 1 million, and there's 33 producers, and they're all looking for the same thing as cash flow. And they haven't got it. And they have to sit there waiting for 2 majors to come together to eat the scraps up that aren't material to them. So this is how the industry's gone. There's no mines, right? So ultimately, you have to find things that look like they're going to be mines. And they got to be big, and they've got to be material to an acquiring, producing mining company. And if we go see an asset and we say, 750,000 ounces, we're out of there. Somebody else can have it.
Yeah, I get that you need to be 5 million ounce plus to be interesting.
Oh, there hasn't been a 5 million ounce plus found.
Sure.
I think there's one. Sol Gold in Ecuador has been found as a gold equivalent basis in the last 3 years. Cardinal's there too, yeah. You know. There's not much, and it used to be in the 90s you could get up to 5 or 6 of them a year, on average.
True.
Or good explorers.
But so where does that put companies like yourself? I mean, we're just over $1 million, a million ounces at the moment. You want to get to 2. I guess you want to go from 2 to.
Well, right now that are 43-101 compliant, just on Kinsley and Blackpine, we're at 1.78 million ounces of good gold in the Great Basin, and we're in Turkey. We're about 1.3 million ounces and 1 billion pounds of copper and 35 million ounces of silver.
But it does not put you in a sort of large pen with lots of other people like you at the moment. How do you move from there to where you need to be to kind of get?
I think we have to.
Recognized?
I think Blackpine is going to exceed the other 2 easily.
Right.
And so if you see it and you can feel it, and the drill holes, historical data and compilations support it, you go in and you make that big as fast as you can. Because it's material.
Okay, so let me very, very quickly say, I always like to do this because I say to investors, look at the management team, look at their track record, listen to what they say, and listen to what information they provide. Let's go. We're looking at board of directors and management team. Who's active? Who's just a name? So let's focus on the active people who've got a track record of producing shareholder value and are actively helping you.
Every board member
is
active. Each has a different specialty.
Are they all full-time?
They're all full. Well, I guess they're independent board members, but full-time means they're on. We haven't had a board change, I don't think, in 5 or 6 years.
No, I meant as in, are they thinking about Liberty Gold
they always
wake
are.
up and go to bed?
Sure. Mark O'Day is for sure every day. Moira Smith she runs all the exploration.
Yeah.
Obviously, I'm there.
Yeah.
Sean Tetzlaff is absolutely brilliant on securities and rules and everything else like that. So if we're going to go do something, he's the cautionary wise man at the table.
He's the auction capital guy.
Yeah,
he's got a few other things going on, as with Donald, presumably.
Yeah, Donald has the same, yeah. So everybody is proactive and they're all good. And Mark and I get along really well. So if I need him or he needs me to do something, we get it done. Right? If I need an introduction and I don't have an introduction to the president and CEO of a senior my gold company, but one of the other board members is a friend of them, they just link us together. We just ricochet around. So when I'm working on behalf of the company, half the year I'm on the road.
Why? What do you mean?
I never stop. I'm marketing, I'm going to site, I'm visiting projects, seeing the geologies, verifying budgets, and going, meeting mutual funds, meeting institutions. You never stop. If you stop, you shouldn't be in the business.
Okay, so earlier you told us about the strategy for the business. There was a clear decision made 2 years ago as to what you wanted to be doing. It didn't include Turkey. You're offloading, hoping to offload Turkey, get some cash into the business, drive the US. So, and you're telling me that, Black Pine looks more interesting than Gold Strike. But
at this point, basically, if we hadn't drilled a hole to Black Pine and Gold Strike, but we started, Gold Strike was 2 years in advance, and we love it. It's a great deposit. It's going to be a good mine. Sure. Right? The economics show it's going to be a really good.
But is it going to take you from where you are with a bunch of other people to, stand out business, differentiated?
No, we're going to be a bit different than everybody else. We're going to do two of them at the same time.
Right, okay.
We're going to do Black Pine and we're going to do Gold Strike at the same time.
And that's going to create the value?
Absolutely, yeah. Because how many oxide deposits are left in the Great Basin, right? Very, very little. There's ourselves, we've got two major ones. We've got Gold Standard Ventures, which has done a great job of what they've found at North Dark Star and Pinion. And they've got Bullfrog, I guess, which is Corvus, but that's more of a sulfide system now, because the grades at Bullfrog are points, and that's it. The oxide's gone. But
this isn't a competition about the Great Basin. This is a competition for investors' money who can choose to invest in companies anywhere in the world.
That's correct. Yeah.
So, thinking globally, do you feel that the assets you've got and what you hope to do with them is going to allow you to stand out globally as a meaningful gold potential producer?
Yes.
Okay, fantastic.
Yes, because they meet all the size criteria that everybody's looking for.
Right, okay. That's what
very simple answer.
Okay, good. When we finish off, can you give me 5 reasons investors should be thinking about Liberty Gold as part of their portfolio?
Under what investment context? Is this retail or institutional?
Making money.
Making
Any
money.
investor, institutional, retail, high net worth family office. Why should people go? Your existing shareholders have got a view. They're sitting there. They like it. It's traded, but they're sitting there because they believe your story. Okay, you got some great names on there. Fantastic institutional names. A lot of people will be quite jealous, envious of that. But in terms of new investors coming, whether it be institutional or a site.
Number one, they have to chart the stock and they have to compare it to other groups. They have to look at the volume, because if they want to buy it, they have to find they can get out of it. So it's a very liquid name. That's not the priority on it. The jurisdiction is everything. Okay. Right? So jurisdiction is really important because of the fact that there's no new discoveries made and we're sitting on several in the right jurisdiction.
Yep.
And you're even seeing that from the institutions and corporates, producers out of Australia. They're all trying to get into the Great Basin. Because if you're sitting 2/3 in Africa, 1/3 in Australia, where do you want to go? Guatemala? Yeah. Right? So now you're coming into North America because their shareholder base are driving them towards us. And we get a lot of buying from those jurisdictions.
So I should have asked earlier, you're fully permitted and
absolutely done.
The stage you're at, and it's a well-known process even if you haven't.
If we had picked up these projects today, we're screwed. Because if you started a bull market today, it would take us 2 years before we get your interest. Now we've got every permit in place on every project to drill where we want, and we have no time delays.
Perfect. So liquidity, jurisdiction.
And timing.
Timing, right. Meaning what?
Timing is we just go to work, right? We're not delayed by a permit.
Okay, got to get on with it.
Get on with it and just go. Not a lot of these things are set up properly.
4?
Jeez, there's just so much.
There is a lot. Well, I would argue.
4 is we're right in line on both deposits at or above what the average run-of-mine heap leach operation is in the United States of America.
Right, so
that's easy.
You got great comps.
The comps work.
Right.
The strip ratios look like they're going to work nicely.
Yeah.
That's because when we talked about strip ratios before, if the strip ratio is 6-to-1 and it's a 180 cost per ton, I mean, you're dealing with 10 something a ton of margin gone. The strip ratio turned the economics negative.
So these are known. And the fifth one, I guess you're going to say, potentially, if things go according to plan, you're cashed up through to post-DFS.
Pat, we're cashed up through this year, but what that...
I meant with the sale of potential sale of Turkey.
Oh yeah. That's all fine, yeah.
Right.
But the other key point is it hits the minimum threshold of projected production numbers in the right jurisdiction, at the right grade and the right metallurgy, and there's more than one of them in the company, in a market conditions that we're looking at today. So you're going to be on the target crosshairs of anybody who's looking for another mine that are cheap to build and quick to permit.
Perfect. Thanks very much, Cal. We look forward to keeping abreast of the story as you go forward and hearing what you've managed to achieve later this year. Thank you very
so
much.
Pleasure.
Cheers. Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.